YouTube, if y'all could be so kind as to give me a yes if you see my face, hear my voice, and see my screen. A bit of a crazy day today, without question. All sorts of nonsense, all sorts of alerts, all sorts of trades all day. Let me go ahead and check. This, Amelia, are we looking good? Let me know, please. We're good on Facebook. All right. Good on YouTube and on Facebook. All caps. Bam. Okay. So good afternoon, everyone. Thanks for being here. My name is Joe Rokop, Managing Director of Commodities and Equities here at Simple Trading. Today is Thursday, March 11th, 2021, 3:04 p.m., and the market has just closed. So let's take a look at what's what and what's going on in the world today. Let's start with Twitter. So you can take a look here. It's JR_strike zone if you want to follow along or get this in a bit more of a timely fashion. This morning, the Journal surveyed economists, and we were looking for a stimulus package to help the U.S. gross domestic product grow by 6%. 6%, which is spectacular. Looking for consumer prices to rally by 2.5%, and employment to increase by 500,000 jobs per year. So that's great news, and that's some of the stuff that blasted the blue chips up today. What are the blue chips? Blue chips are the blue chip stocks. What represents the blue chip stocks? Well, the Dow Jones. Hence, all-time high at 32,641. Earlier today, initial jobless claims filed traditionally through the states fell by 42,000. Lovely. Down to 712,000. Not as lovely. But that is the lowest level since November 7th. Okay. Which was 711, right? So within 1,000. That's very nice. A great sign that the economy is moving in the right direction. Stocks, of course, popping higher today. As I mentioned, blue chips leading the way. Well, really the Nasdaq led the way as it popped the highest on the day. But blue chips were the story because they were at their all-time highs. U.S. job openings rose to 6.92 million in Jan, revised up from 6 in the orders. This is up from the pandemic low of 5 million. So we got about 2 million more job openings now than we did in the pandemic low. However, total hiring fell by 100,000 slots from Dec to Jan. Now, that's not really that big of a move. It's well within the margin. And also note the retreat in government bond yields came after the European Central Bank released plans to increase their pace of bond buying. So that's good for tech stocks, right? That's good for tech stocks. And as we close the day, let's downsize Twitter here and take a look. Here is the Nasdaq again. That big pop, that pullback, settled kind of just above fair value here at 13,060. Let's take a look at the indices. 13,400. In the indices, futures trading 13,060. If we look at the S&P 500, that's 3940, currently trading 3936. So the discount between indices and cash is very little right now, when often it's a little bit closer to 5 to 8 points, not as large at the moment. All right. And moving on, okay. Let's talk about the Dow. Okay. Well, we'll quickly look at the S&P chart from today. They're all pretty much the same, where we had this rally up and then the pullback going into the close. The pullback was a little bit more extreme in the ES here than it was in the NAS, as I recently showed. And now we'll look at the Dow. Okay. So here's that all-time high, 32,641. Okay. What's the next level? Where are we going to go next? Well, 33,000, right? At this point, we are either using average true ranges or standard deviations or Fibonacci levels, right? Those are good, and those guide us and give us an idea as we rally 500 more points, will or hit, stall, come back, and then pop on up. Okay. So what do we do between now and then? Well, ideally, we keep an eye on bonds, we keep an eye on inflation, and we buy dips. We buy dips and then sell new highs, and then buy dips and then sell new highs, and take this as a step up market. That is the ideal situation for us. I am sick of the shenanigans. Give me a real pullback so I can feel safe buying. Will this work for cryptocurrency? No, cryptocurrency is much different than futures trading. This is a volume-based system, so that would be a bit more challenging for you to do. If we're looking at some volume-based trades, I'll show you the Nasdaq trades that we did earlier today. So I recently launched a signal service. So what is that? It means if I put on a trade or a position and you're signed up for that signal service, you'll get a push alert sent to your phone saying buy here, sell here, here, and here, and here. Okay. Let's look at one of them from earlier. Okay. So this, well, I'm not sure what the rules are about this. So I'll just show you on the screen. So we sold 105s, 13,105s. Jonathan's been waiting for the signal service. Love it. So we sold 13,105s. Our targets were 13,071, 13,041, and then we had that stretch target down here at 13,027. And our stop loss was just above the swing high of the day. The way that these panned out, so we had two alerts. Okay, the first alert was a loss of 880. The second alert was a win of 1,820. So based off of the two alerts, the P&L on the day was 940, and I believe the alert service costs $1,097 for the annual membership. So the alert service was paid for today, less $100. Good start. Okay. Now, unfortunately, this was launched last night, and I did not have access to send alerts out until this afternoon. And the big alerts were these breakout trades right here in the Nasdaq. So breakout trade, we bought a new high here in the Nasdaq as we rallied up here going into the 9 to 10 o'clock hour. Okay, so we got in at that 13,017 level, okay, which you'll notice coincided with our downside target on the reversal. When we broke out, we looked to scale out along our HVAs. Those are all, of course, in the newsletter, but let me give them to you right now. That's 13,041, 13,080, and that actually needs to be adjusted to 13,086. Okay, and then we are forming a very light one up at 13,108. So let me show you where we got out of this trade. We looked to take this on up to that first HVA or that second HVA at 13,087. So we scaled one out of one here. And then our second lot, we got hit on that trailing stop as we pulled the market or pulled our trailing stop up along that slow moving EMA, which on this chart is in yellow. Let me go ahead and expand that just a little bit for you so it's a bit clearer. All right. We took a reversal here, stopped out, and then we gave it one more shot over here. And that's when we had that second win on the day, or the first win if you only had the two mastery signals. But going forward, we'll have the signal service all day long and all night long. Now, I don't know if I'm going to have anything on overnight. Right now, I've got an idea for the NQ, actually. That's starting to look somewhat attractive. The only problem with the alert I have in mind is I don't like my stop loss level too much. So I'll have to give some thought before we go ahead and send that out. Michael, I want to take your class next week. After that, do I require a subscription to your monthly newsletter to get the HVAs, or will you teach us how to create them? I will teach you how to create them. For sure. That is going to be a big section on the class, is the formation of the HVAs, not only how to draw them, but how to use them and in what specific scenarios, first and foremost. And then the newsletter has the HVAs, so you can check your drawings versus mine if you want, right? There's no requirement, of course, to do that. But if you're making money, the system's working for you, definitely afford to double check, or vice versa. If you're struggling, that is an opportunity. So whichever works for you, but we just want that to be available because a lot of folks ask for that. And again, the signal service is, like I said, sign up for that, and then all the trade alerts are sent out in a chat room, and they also are sent out as push alerts on your phone. So if I'm entering a trade, you'll get a pop-up notification. Go ahead, place it, and that's that. So let's take a look at the economic calendar for tomorrow. We have the PPIs in the morning, okay? There's also that federal budget. And now, in theory, that's in the afternoon. We don't know specifically when that's going to be. I haven't had the chance to look at that yet, but I think tomorrow, Friday, is going to be similar to some of our previous or last week Friday, where it's just very choppy. And some of the signals are not as high probability as I prefer them to be. Okay, not quite as high probability as I would prefer them to be. So we're gonna keep things tight tomorrow. Okay, we're gonna have fewer trades. We're gonna double our stops and put our size in half. So we have the same monetary risk for our trades, in theory, or less even, at less even. Okay, so my thought process is tomorrow, use caution. If you don't catch any nice moves in the morning, I would call it a day, put your money in cash, and then wait for next week. And then I think the opportunities next week will far exceed the number of high probability opportunities tomorrow, right? Especially if you're up on the week, right? You don't want to give back and kind of piss away that risk capital. I hate to say it like that, but that's but to be blunt, that's really what you'd be doing. It's quoting our president, Mr. John Carter, from earlier today, or no, actually quoting him from Friday afternoon of last week. He had said the same thing. So keep that in mind. Now, again, just a reminder for the alert service is I send out overnight trades too. So if there's a trade I want to put on tonight, and if you sign up for the service, you'll get that alert sent to your phone. And then you can take that position into tomorrow. I don't know if tonight's going to be the night for that based off of what I saw today and based off of what I'm expecting tomorrow. Now, here's what's really important is that I'm going in at the moment, I'm going into tomorrow without a directional bias, okay? I'm going to reevaluate what I see tomorrow and go from there. Okay, so when I do my daily morning routine, that's really what I'm going to be focusing on are the technicals, right? From a fundamentals perspective, I got to be honest, it's a fairly challenging decision for me to make and predict right now, which is why I don't have a plethora of long-term positions on at the moment, right? That's kind of why I'm in and out a little bit more lately because the intraday moves are so big. I've been saying this for a while. Moves that take 2 to 3 weeks are now taking 2 to 3 days. Moves that take 2 to 3 days are now taking 2 to 3 hours, right? So that's an important distinction to make. Question is, for your overnight trades, is it possible to replace the futures contracts with equivalent equity index options contracts? You can do it with equity indices, but options on equity indices don't really translate as well. The only way to do it would be is if you are looking at the futures price and the market hits that futures price, then the timing of the exit would be correlated. It would be kind of like using it as a hedge, is the best way to describe it. But that's somewhat of a more complicated way of saying not so much. Definitely okay to correlate them with indices themselves, right? Because there is a fairly direct correlation, especially given the cash balance between the two is fairly low at the moment. So if you were to do that, I would definitely use the indices as opposed to options on indices. That's kind of where you'll get into a little bit more trouble. Okay, because it's not quite as clear. Now, gold, I am going to be looking at gold tomorrow. I was mentioning this in the futures room earlier. Forgive me if I'm repeating myself. But based off of the HVAs, this swing low here, 1675 that we had, I don't think the break in gold is over yet. But I'm not bullish or bearish at this juncture. Okay, so we have had some great intraday moves in gold lately. It's been pretty challenging to get on top of them because a lot of them have started during the European session at 2 a.m. CT. So I will be looking at gold tomorrow morning when I start my daily routine at 5:15 to see if there is a trend that I can jump on, take that into the U.S. Open, and then reevaluate from there. So I think gold's also a way to go. And then more importantly, and most importantly, focus is on crude oil. Crude oil is a trade that I have on and have had on for a while. I believe last Thursday I gave you guys this level. It was 63.55. You can check me on that. But that's that buy level in crude. That's that nice strong HVA. There's also one below it at 61.64. Didn't get there though, so just long from 63.65 and scaling out on the way up to the 70 handle. Now this particular trade is a bit riskier than it was when we initiated it, and that's due to the fundamental picture, which has changed. And why has it changed? What has happened? Well, Russia, who is OPEC plus, has just announced that in May they will be increasing their production by 1 million barrels per day, or to be more accurate, 890,000 barrels per day. And when you say increase, they are increasing, but really they're reducing the amount of production cuts. So 6 to 1, half a dozen to another. But Russia will be producing more, and that's why we had that big dip. Okay, that's why we have that big dip. So we're going to be keeping a close eye on any news out of Asia, be it the Middle East or be it Russia, on the crude oil complex, as we could have a huge crash in oil prices if Saudi Arabia announces that they are not going to continue their voluntary cut of 1 million barrels per day. That is a voluntary cut that was not agreed upon or required based off of the agreements signed by OPEC plus. Now they could put that back on in a second, right? They could put that back on in a second, and crude oil would get smashed. And then, of course, if Russia piggybacks on that, if Libya piggybacks on that, then we'll get back down into 60. Yeah, buying dips. Saw that China was buying a lot of oil. The one thing about news out of China is that it's often delayed, and it's often a much longer term play. So when I'm saying Asia, I'm really referring to Russia and the Middle East. Okay, not so much China or Japan. Really the north and south parts of Asia, not so much China. So the news out of China is generally has a smaller impact on prices. Dubious. Dubious, yes. And the refineries, yes, are a little bit different too. So, but again, long oil is what we're in right now. That's really the main exposure I have. Otherwise, I'm not carrying and or warehousing a great amount of risk at this point. So, okay, so I will wrap it up there and leave you folks with that. I am in the Simpler Trading Futures room tomorrow morning for 2 hours. I'm on the mic from 8:20 to 10:20 in the options room for half an hour. The alert service is up and running. And most excitingly and most importantly, we have a class a week from Saturday. I strongly encourage you folks to sign up for the class, because not only will it's a 5-hour course, right, and we'll be teaching you the system, but in addition to that, you can trade live with me during the days, and there are 5 live trading sessions during the day. So you can see what it is I do, how it is I do it, and then take that and add that to your repertoire as you see it live and in real time, right? So, markets willing, when we're trading live, if we have a few profitable trades or more wins than losses, that would or that could simply pay for the class. Now, there's no guarantees. God, only knows what's going to happen in the market. But if the math persists, right? And again, so the goal of the class, and this is something I really want to stress, is simplicity. Simplicity, right? it's kind of a very mechanistic system. If this happens, we'll do that. If that happens, then we'll do this. So we're really breaking this down into just a checklist, right? So we're not just looking at the market from a completely subjective standpoint. We're looking at it very objectively, right? And we're not leaning too hard on a bias saying, I think the market's going to go up, so I'm going to buy it. No, we have a checklist of things we need, variables A, B, C, D, and E to fire, then we go long. Okay. If we're going to take a reversal, we're not simply going to say, well, it looks overbought. Let's say, let's look to take this back down. No, we need very specific things to happen. Okay. And we need to see those moves, and we need to see the technical variables or indicators fire. Now, included in the class are chart books for Thinkorswim, for Sierra Chart, and then for Top Steps Trade Ovade. So if you purchase the class, you get the free chart book along with it. And then, of course, you can opt into some of those live trading days. So we'll send out a link to that. So it should be a lot of fun. We got a ton. Is the strike zone different from the volume breakout system? Yes. So the strike zone, so the volume breakout was geared towards understanding the technicals and that one volume breakout, buy the new high, sell the new low signal, whereas this one's going to be going over all 5 of my favorite signals. So there is going to be a pretty big difference in what is taught, and I'm also going to be focusing much more on the HVAs and how to use those. Okay, so it is a pretty big difference. Now, as always, it built, one builds off of the other. But the difference between the two classes is fairly significant, right? And what you'll learn in this class will certainly complement the first one, but ultimately it's going to be a whole new bucket of tricks, right? And it's going to be focusing on all of my entry methods and the ones that have been really killing it so far this year. So, all right, so I will leave you with that. Took up your time. It is 3:30. So sign up for the class. Super excited for that. We'll send out the links here in just a moment. And I hope everyone had a good time, learned a little bit this afternoon. Lots of love to everybody. And as always, have a profitable day.